So, Mike, I know you're going to say that a lot of times these strikes get resolved at the last minute. Okay, let's pretend that we know that for a second. In the meantime, what kind of goods have stopped being transported, and then what's the economic and inflationary effect?
Well, they've already stopped ammonia shipments, which are a key ingredient in fertilizer, and that's a big deal for American farmers because ammonia is so volatile. They don't want it sitting around in tank cars if all the trains have to stop. This afternoon, Norfolk Southern is going to stop taking deliveries of cars at its rail loading sites, so the automakers are going to not be able to transport new vehicles to dealers. And we've already heard Amtrak has canceled some of its long-distance service that runs over freight railways, freight-owned rail lines. So we're already starting to see some effects, but it's obviously, if this goes through, going to be a much, much bigger impact. As much as $2 billion, as Ritika said, a day, according to the American Railroad Association, and 28% of U.S. freight, which would account, according to the American Trucking Association, you'd need 460,000 additional trucks a day to make up for that capacity.
It's a lot of trucks. Mike, one of the things that a lot of companies learned during the pandemic was they need bigger inventories. Is that inventory cushion still there, and will it protect firms from a relatively short-term strike?
Well, it goes industry by industry, and a relatively short-term strike probably won't hurt all that much because there are stocks and they could rebuild them. It will just stretch out that process. Biggest issue coming up is going to be agriculture because it's almost harvest season. So trying to get grains, et cetera, to where they need to be is going to be a major issue if this should happen and drag on for a little while.
Can we ship the stuff? And I ask because the Jones Act requires that you ship stuff in the United States, but with a U.S. ship crewed by U.S. personnel. They've been trying to get that repealed for quite a bit in terms of, say, petroleum products. Is that an option right now that people are talking about?
Not yet. It is not a major issue yet because most of what we're talking about goes inside the United States back and forth. But to the extent things are shipped overseas, because they are going overseas, they can use foreign flag vessels. They just can't go from U.S. port to U.S. port. So at this point, it's not a major issue. I did forget when you asked about things that are going to be canceled. One of the things that's going to happen, like Amtrak with its freight railroad lines, any commuter rail lines that go over freight lines could be shut down, and they're talking about that for Chicago. They're talking about that for Washington, D.C. So a lot of people might not be able to get to work.
A lot of people have learned lessons on that front. Working from home has become more normal. It's certainly something that we've got very used to here in the UK as the strikes have taken place. People have just gone, you know what, I'm going to fire up the office system at home. We're good to go. So it's going to be interesting to see what impact that ultimately has. Mike, boil it down for us. What impact could this have on PPI? What impact could this have on CPI?
Well, nothing yet, but it's going to, if it happens, it will have a major impact on CPI because transportation costs are included in the retail final selling price. PPI, not so much, because PPI is what you pay the producer when it leaves the factory gate before it gets on the train. So that won't have as big an impact. But you look here at, this is the kind of chart of the day, I think, for inflation. The purple line shows the number of products that are experiencing a more than 4% inflation rate on an annual basis, and that's up to 60% of what's in the CPI. It shows how broad-based the inflation pressures are. So the last thing we need is something else that adds to inflation.